What's going on, guys? Chris here, and I just wanted to go over a few things in pre-market on SPY, this chart, real quick. For those that didn't want to go through the written analysis, I figured I'd verbally go through this chart real quick and kind of explain my thoughts on SPY in the coming week. So, there's a few things going on here. We have a bull market reversal line price at 454.31. We have a support range 1, support range 2, support range 3, and then here in this little kind of light red box, I have what's called a dump range. I'm going to go over all of these aspects real quick and essentially break it down. So on the yellow line, we have outcome 2, and on the red line, we have outcome 1. Now, the difference is outcome 1 is I kind of see both of these as being equally possible. Outcome 1, the red line, is if this coming week the Fed releases some kind of good news, or if tech earnings somehow do really well and it ignites some bullish sentiment in the markets. But personally, I don't think that bullish sentiment will last. I think that with inflation and rising interest rates, it's really going to put a damper on a lot of these tech companies and the way they're able to operate. It's going to start lowering the profit margins for a lot of companies in general, actually. And I think that a lot of retail investors are going to start feeling a difference in their wallet from this inflation and rising rates. So I don't think the bullish sentiment is going to last very long. I think, you know, if it does, we're going to see a bounce off of around 455, which is a pretty good ways. I mean, right now we're at 435, so that would be a $20 move, 5%. It may take a lot longer than what this line represents, but that's not the point. It's the point of these lines aren't to necessarily time the market. It's more to get a game plan, an idea of the price ranges and where we stand. So I've decided that 454.31 will be the bull market reversal price. The reason for this is if we go out to, I believe I used the monthly. So if we look at the weekly as well, you'll see that we have a nice long red candlestick, but the previous one that I'm using as a benchmark is this one. And as you can see, the opening of that candle was around 454.50. So this isn't meant to be an exact price. It's not meant to show that as soon as it goes over it, we're now, super bullish in the market. It's just to kind of give myself a reference point so that if the price does start to go above that, I can now change my perspective um, and start to chart a little more on the bullish side of things. But I believe I derived it from the monthly. Let me take a look here. Yep. Yeah, I used the monthly here. I used this hammer candle as the benchmark for that. All right, so if we're moving on, we have the resistance range 1 right here. And I believe I derived that from Fibonacci retracement. If we take a look here, do, do, do. Yep. So I got that from the Fibonacci retracement. I went up just slightly above the first level there, and I feel like that's pretty accurate. I mean, at 448, we have what was kind of like the top of the shoulders for a Head and Shoulders, and I made it a range because I kind of wanted to extend it to the top of this here, just in case. So that's where I got the resistance number 1. I see that if there is a reversal, probably around this area, we're going to see the most consolidation. So it's probably best to stay out of trading once we reach that point. Right below it, we have support range number 1. Trying to remember how I derived that. Let's see. So I believe it was a mixture between the volume price analysis over here. You can see that we go from an area of most volume to an area of slightly lower volume, along with the fact that there was some high consolidation in this area. And you can see here where price kind of rejected in that range previously. So that was support range number one. If SPY does begin to fall past my initial 430 range, then we'll get to support range number two. So it is my personal belief that we will at least see 430 or 432 around there before we see a reversal. I think the market still has a little bit of downside left to it, and I don't think that confidence has come back to the markets yet. Maybe Monday or Tuesday we'll get some kind of earning that sees a rebound, but other than that, I still think we're going down to 430, 432 before we see any kind of change in this trend. Another possible outcome that I was seeing was over on this side, clearly there was quite the spike. So that's another reason why I'm kind of concerned, and I don't think it's going to head directly down because typically charts are pretty symmetric, and if it had a nice bounce or consolidation in this range, we're probably going to see the same thing over here. At least some sort of. It might not be as big. It might not last, 2 months, 3 months, but we might see a few weeks where it's coming up, coming down in this range. So support range number two, I derived that from the volume price analysis. As you can see, we have most volume over here. And once again, high consolidation in this range. So from support range number one, from 430 to 420, don't think we're going to see much resistance or support rather. And if you look at the price in this area previously, that's kind of the case. Didn't really have much consolidation or time spent in this area. It kind of moved through it quite quickly. And then if it happens to break support range number two, which is going to be a little difficult because I believe it's pretty close to the most volume for this entire price, for this entire range in general. But if we break support range number two, then we're probably going to see a very quick fall down to support range number three. This is for a few reasons. If you look at our volume price analysis, you'll see that there was barely any action in this area, or any time spent in this area rather. So I'm expecting that again. If we break through 415, we'll probably see a swift fall down to at least 400, where we also have a gap to fill. So 400 is going to be a little difficult to break, I think, just because of that psychological level of support. 400, 450, 500, those are all good psychological levels of support, and I think that's the case this time around as well. So I'll probably include that here pretty soon in the plan. But as always, this is just my theory analysis on the market. Do you guys have any other ideas, charts? Please share them. This could be totally wrong. It's very possible. And the more perspectives we get on this, as always, the more likely we are to end up being correct. So if you guys enjoyed, leave a reaction, or if you have any critiques or any suggestions, let me know. Any questions, let me know. And let's have a good trading day today, guys.